Financials under pressure this year, down 14% as a group. However, our next guest is seeing big upside for the banks. He says they're recession ready and earnings will be better than expected. Joining me now is Wells Fargo Securities, Mike Mayo. Thank you for coming in. It's nice to see you. Your first trip back here in quite a while, right?
My first trip back here since pre-pandemic.
All right. Well, it's good to have you in the house. So banks are recession ready. That's great. It's like I'm ready for a thunderstorm. I have my umbrella. That doesn't make me want to run out and play golf. Oh, why should I buy the bank stocks just because they're recession ready?
Well, first of all, what do you think of when you think of banks and recession? What's the first thing that comes to mind?
You can probably say, like, what, global financial crisis?
Exactly. Bingo. You got the answer right. And that's what a lot of investors and money managers think of. They think recession, banks, global financial crisis, sell them all, forget it. They're going to blow up. Well, the regulators stepped in after the global financial crisis and de-risked banks materially. And we try to sum up, we have a multitude of numbers, hundreds, thousands of numbers, but it all comes down to three numbers. And we see banks having improved the level of their loan losses by 1/5, the level of their leverage by 1/3, and the level of their liquidity by 1/2. So we're talking about better losses, leverage, and liquidity. Mm-hmm. That's as clear as day.
Okay, so banks are in great shape. Great. Yeah. I mean, that and, whatever will give you a ham sandwich. But why does that make the stock prices go up?
Well, how many strategists do you have? Macro thinkers, big picture economist types have you had on your show in the last year? Probably more than you had in the prior decade combined. I mean, yes, you're right. When the banks report earnings, it's good. And they've outperformed by 200 basis points versus the market since they reported second quarter earnings. And then you get all the big picture macro thinkers saying, look out for the recession. Well, if there might be a recession, that's fine. But here's a big takeaway. And this was the result of months of research on our part. Banks should grow earnings during the next recession. I will repeat that because that's an important conclusion. Banks will grow earnings through the next recession. Now, I'm not talking about a hard landing. I'm talking about a run-of-the-mill recession because the de-risking should mean lower losses for the banks. A lot of the most risky loans are not in the banking industry anymore. And the other factor is a tailwind, a half a century tailwind from the growth in traditional banking revenues, Main Street banking revenues. So you get this growth in what's called net interest income or Main Street banking combined with lower losses, and you're going to see bank stocks grow earnings in a recession so long as it's not a hard landing.
Okay, let me make sure I'm clear on what we're talking about here, because when you go out of your way to say Main Street banks, I don't think of the big banks that you cover down on Wall Street. I think of more regional banks that you are alluding to or implying that they can do well during a recession. Am I right, or am I off on some island somewhere?
Well, look, the Federal Reserve stepped in for all large banks. You have what's known as the Fed stress test, and I'm usually on your show around that time, once a year. And so the Fed is looking over the shoulder of the banks and penalizing the banks the minute they have, higher risk loans. Every year they're penalized, and that's forced them to de-risk. So, but we just keep our theme, Main Street banking tailwinds, Wall Street banking headwinds. But in terms of resiliency, the entire industry has gotten better. But you're right, Main Street banking, that's more, our favorite is still Bank of America. They have a lot of Main Street banking. They're America's Main Street bank, and they have one of the strongest tailwinds from higher interest rates and loan growth and this de-risking benefit on the loan loss
But you
side.
still have buy ratings on the. Don't you still have buy ratings on the J.P. Morgans and Morgan Stanleys and Goldman, or at least on Morgan Stanley and Goldman Sachs?
No, I mean, look, our favorites here are Bank America #1, and then some regional banks like PNC and U.S. Bancorp. By the way, those two banks are recession proven. They did great during the global financial crisis and other recessions. But we're over-indexed to those Main Street banks, regional banks, and especially Bank of America, which is more of a regional bank than they get credit for.
Okay. It's good to see you. Thank you again for being here. That's Mike Mayo.